welcome. Thank you for joining, Guy. Good to have you back in Korea. Why don't we start with the just general, road tours where Ethena is today. How did you get started with the Ethena? How did you get conviction initially? You started this team at the toughest time of crypto. After collapse of many giants that were in the industry. Could you share a bit of an early story?
Yeah, for sure. So Ethena started around 2.5 years ago now. It was kind of at the bottom of the last bear market. And I think the perspective I always had was that kind of, if you're going to build something, you kind of had to do that anti-cyclically, i.e. you have to kind of build when everyone's leaving the space for dead, and then you sort of see the fruits of that come out when people sort of return to the market. So it's kind of what we did. And I think the timing was basically just around when Luna had collapsed at the back end of last cycle. And I think the very simple insight that I had was, the demand for like $1 with a yield doesn't have to be 20%, but some sort of return was clearly in the multi-billions. And this is like a product that I think is widely sort of accepted now as one of the very few products that has like global product market fit within crypto now. And the product that Ethena had put together was this sort of like idea of a tokenized cash and carry or tokenized basis trade. And it had been something that I've been doing like personally on the side, but had never really turned into like a product. And I think the view that we had was, there's clearly a demand for this thing. If you do this well, it's a multi sort of billion-dollar outcome on both the product and then the protocol itself. And it felt like taking a slightly different approach to what we'd seen last cycle was going to be a big opportunity. So started around 2.5 years ago now. The product's been out for about 18 months, and in that 18-month period, grew from 0 to roughly $16 billion now across the two core products that we have. And excited to be here to chat through the whole thing.
Awesome. At 16 billion today of supply, and also you were the second fastest app to become $100 million club in revenue. What were some of the unique design choices you guys made early on and still iterating that really made that fast momentum of growth that we see today with Ethena?
Yeah, so I think within stablecoins or dollar-based products, it's actually quite difficult to create products that look different, right? So if you think about it, it's an extremely commoditized product where you only really have like 2 or 3 jobs. One of them is you need to be $1, and if you depeg from $1, then you don't really have like a business pretty quickly. The other one is you need to be liquid, and when you're a startup, to compete with the liquidity that you find and distribution that you find with people like Tether and Circle is extremely difficult, obviously starting from 0. And then the third axis that you can think about is return, and that's where you can sort of experiment with what else can you put within a dollar asset that isn't just a T-bill that might be able to create sort of excess return. And so, I think the derivative market within crypto was a pretty interesting untapped sort of source of cash flow. So if you take a step back and just ask yourself a question of how many different places can you find $10 billion of annualized cash flow within crypto, there's only really kind of like 3 places. One is Binance equity, the other one is Tether equity, and then the third one is actually the basis that exists within the derivative market. So that market size is roughly $120 to $150 billion in open interest right now, paying anywhere between like a 10 to 15% annualized yield. And for us, it just seemed like a pretty insane mismatch where a lot of people are obsessed with this idea of yield within crypto, but we don't really produce a lot of things that actually generate cash flow. And this just felt like an untapped market opportunity to take that sort of source of income and try to put it in a format which we thought made the most sense, which is sort of a dollar format. Yeah.
As a user and the person in the industry, I thought something that's unique in Ethena is that exchanges actually play quite a big role in the ecosystem, and a lot of the largest exchanges around the world are actively integrating Ethena into their system. I think the big milestone was Binance, obviously integrating you guys. What are some of their roles, and why is it important to have that collaboration with Ethena stablecoin?
Yes, I think the relationship between Ethena and exchanges is quite unique because obviously to actually create the product that we have, we rely quite a bit on the centralized exchanges because we need to tap into the open interest on their venues. But it can be quite a symbiotic relationship, right? Because Ethena brings flows, it brings open interest, it brings liquidity to their exchange, which is obviously very helpful to the largest derivative exchanges in the space. But then equally, exchanges have always been like the best distribution platform for dollars within the space, right? As big as you think DeFi is right now, I think it sort of pales in terms of like user numbers compared to like a 280 mil users that are sitting within Binance right now. And if you look at the history of every successful sort of dollar issuer within the space, it's always been intricately linked between dollar issuer plus exchange. So Bitfinex plus Tether, or Tether and then all of the Asian offshore exchanges, and then Coinbase plus Circle. And so the view that we had was like, if you're going to succeed and actually grow this to multi-tens of billions of supply, you actually needed the exchanges to buy in and actually be behind what you're doing. And so we tried to be quite focused on that from day one, where I think it was maybe a slightly different approach to other builders who start in DeFi, where I think sometimes they just ignore the fact that CeFi even exists. They sort of see it as like an enemy, and we're DeFi against CeFi. I think from our perspective, it had always been one of the most interesting distribution channels that we needed to try, align with. Yeah.
Another big milestone you guys announced was a DAT vehicle of Ethena. Obviously the market today is quite overwhelmed with such an immense supply of a DAT product, but I think what you guys did was one of the most successful case for such a young altcoin to have that vehicle. What's the role that you think that DAT will play in the industry and for the Ethena ecosystem to be a value-add addition?
Yeah, for sure. So I think maybe just taking one step back of like, why did we even think this was an interesting thing to think about? I think it became pretty obvious to us within the last 6 to 9 months that we had like a bit of a flows issue within crypto, and that alt specifically, where there's a lot of VC capital in the space, as you know, but not a ton of sort of capital that sits on liquid markets to actually sort of take projects from TGE through the rest of the life cycle as they sort of grow up. And then you had another problem, which was if you looked at the way that Circle traded after it IPO'd, in the US, it traded up to like $60 billion valuation, 300 times earnings, and the demand that's within TradFi for exposure to what I think is one of the biggest trends within like all of finance right now, which is the growth of stablecoins and digital dollars. It became very clear that there was just not enough ways that TradFi could express a bullish view on stablecoins outside of one single name. And so you really had like two problems here with one single solution which sat in the middle, which was we're in crypto, we don't have enough flows that are actually here to buy the assets that we're producing. There's too many coins and too little money that's sitting within the market now. And you can see that by the way that sort of alt BTC pairs have sort of performed in the last 3 to 4 years. And then you have another problem, which is TradFi want exposure to what we're doing, and they see this as like one of the biggest secular trends coming out of crypto. And so for us, all it really was just that, how could we create connective tissue between what we were focusing on, which had been quite narrowly focused within crypto to date, and actually just connecting that to pools of capital that sit within TradFi. And so, I think a lot of the people who are pursuing these things are kind of like, I'd say slightly short-termist and trying to sort of grab a very, what I view as like ephemeral premium to NAV sort of thing that exists right now, but I don't think makes any sense to exist within 12 months. For us, it was really like, it would be amazing to just have access to these investors, even at 1 times NAV. Like, you don't have to believe all of these premiums would sort of exist going forward. So that was, I guess the basic idea. And then maybe to just jump into one of the other points you're making, which is, how can this actually be involved with the ecosystem beyond just being a capital source for buying the underlying? I think one of the most interesting ways that people sort of try to justify why do these vehicles have like a reason to exist, or why should they trade at a premium to NAV? And one of the best answers for that is that you can create a capital structure within these vehicles which you cannot create by just holding the underlying token itself. So I think one of the biggest themes that we're going to see within the next 12 to 24 months, and we're starting to see the very beginning of it now, is sort of an interest rate cutting cycle within the US. And that has a very important impact, I think, on DeFi rates and the flows of capital between TradFi and DeFi. And what we saw last cycle was when rates went to zero, actually rates within crypto kind of went directionally up in the opposite direction. And I think the intuitive reason for that is as interest rates fall, people want to speculate more on crypto. They go further out the risk curve and to the longer tail of assets. And as they do that, they want more leverage, and interest rates within crypto pick up. The reason I'm giving all of that context is because what these vehicles can actually do now is actually raise debt from TradFi to come and deploy on chain and try create like a spread that they can actually monetize within the vehicle. And we think this is going to be an enormous opportunity, not only just for like Ethena's DAT that you mentioned, but actually Ethena's product, which is like, is there a better product for TradFi to be borrowing at 5 to 6% to then deploy into something within DeFi like USD at whatever, 8, 10, or 12, and that income can actually be sort of monetized within the vehicle. So I think this is potentially one of the biggest catalysts for DeFi generally as like a sector in the next 12 to 24 months. And the more that interest rates fall, within the US, the more that is more pronounced as an opportunity. Yeah.
Awesome. Hash and I have been fortunate enough to be investor in Ethena early on and been working with you in the past years. And I think our initial vision and excitement in Ethena was really the precise PMF into the DeFi market, and also the great execution you guys had on the go-to-market exchanges and so on. But I've been noticing that you guys' new primary growth in the vision has been providing Ethena products into traditional finance. I guess the DAT products are kind of the entry into that. Could you share a bit more about what to come in the future as Ethena is just going beyond crypto into the bigger market?
Yeah, for sure. I think this is one of the things that excites us most about the product, which is if you think about who does a dollar with a yield appeal to? It's like the retail person sitting in Southeast Asia, or it's the biggest hedge fund in the world in New York. A dollar with a yield is a product that sort of fits within everyone's personal portfolio or institutional portfolio as well. And then if you just look at like a very basic level of the metrics that we've seen out of like USD as a product, in 2024 it averaged around 18% return on like zero volatility, and then lifetime to date since we launched, that number's around 13-14%. That's just a pretty crazy number when you put that next to what you actually see within TradFi, where single-digit sort of returns, annualized basis, is a pretty impressive thing to sort of achieve there. So I think the view that we have is that it kind of comes from a place of frustration, actually, from my side, which is we've had this incredible tailwind this entire cycle, which I think is actually the defining tailwind of the entire cycle, which is like we're no longer saying the institutions are like coming, they're basically here, and they're deploying into ETFs, they're deploying into stablecoins and all these different products. But in many ways, like DeFi has actually been left behind with all of the trends that we've seen. So even basic numbers of BTC versus 2021 or stablecoins versus 2021, both of those metrics are up like 2x versus where they were in 2021. But DeFi TVL until like a month ago was actually like 30% below the peaks of what we saw in 2021. And so the view that we have is that we sort of tapped out the capital that we have within DeFi. We're sort of shuffling it between different chains or shuffling it between different apps, but we haven't had that like real inflow that came in to find and actually use our products. And so I think the view that we have is like, we don't want to sit around and just wait for that to happen and hope that it does happen. We want to actually just go deliver this product in a format that they can sort of digest. And I think that that takes many forms. So it can be them coming in just on an individual basis into the product. It could be in ETPs and ETFs. So the market for ETFs and ETPs on like fixed income or bond-like products that sit within the real world is enormous. We're talking like trillions of dollars. And being able to take what we do and put it in a format that's easily digestible like that within TradFi and like public vehicles outside of all the different things that we've spoken about with DATs. Again, we just think is like an opportunity that's like bigger than the entire product right now with Ethena. Yeah.
It's quite exciting. As we wrap up, what are some of your predictions on just general, stablecoin market today, and also on Ethena supply? It's at about 16 billion today. And I think I remember reading your 2024 recap on amazing first year of operation, and you guys been killing it 2025. Maybe end of 26. What do you expect out of Ethena ecosystem?
Yeah, whenever I say these numbers, everyone always thinks it's like a slightly insane or outrageous like claim. But I think it really felt in the last few months that we've sort of reached escape velocity on the product, where you just have weeks where just billions were flowing in and we didn't even know where it was coming from. And I think it has a slightly different perception within the market now in terms of its safety, lendiness, and all those different pieces. I think we'd be quite disappointed if the product was like below 20 to 25 bill by the end of the year, and I think below 50 billion within like a year after that. I think we'd be quite disappointed if we didn't reach that. Yeah, I think the macro view that we have is that the interest rate cycle that we sort of described there is really one of the most perfect backdrops that you could ever have for Ethena, where as interest rates are falling, other stablecoin issuers are starting to suffer quite a bit as like, gross revenues falling down in line with the Fed funds. We think that Ethena's product is kind of going to go in the opposite direction in terms of the rates that it produces. And that just comes into a tailwind of like us reaching escape velocity at the same time. So yeah, I think 25 to 50 billion in the next like 2 years is kind of what we're trying to set ourselves internally. And then I think the stablecoin market as a whole, people throwing around numbers like 2 to 3 trillion in the next 3 to 5 years, I think that kind of makes sense. And I think perhaps one of the more or less consensus views that actually I think Tether is going to continue being as dominant as it is right now, despite the entrance of basically every major financial institution in the world coming to play within this market. So I think like my prediction is 2 to 3 trillion, but like Tether itself becomes like more than $1 trillion asset in the next 3 years, which sounds like an insane thing to even say. While I'm saying it.
I mean, all the predictions in the industry has been insane, but especially for Ethena, you've been executing it, beyond the pace. So we're looking forward to all those, to come to reality. Guy, thank you so much for joining me during Korea Blockchain Week. Thank you, everyone, for joining us for the panel.
Thank you, everyone. Cheers.
Thank you. Thank you.